Good morning, and thank you for joining us today. We have all seen financial institutions running tokenization pilots, and the real challenge is scaling those pilots into production, where they touch customers, where they generate revenue, and when they impact infrastructure. I run the European banking team here at Fireblocks, and in my role, I get to work with many people that are driving value at scale. And I'm delighted to be joined today by three of the leading voices in this space. Nadine Chakar from DTCC, at the center of market infrastructure and post-trade services, where scale and trust are critical. Andre Portillo from BTG, driving digital assets adoption in one of the largest banks in Latin America, and Jason Guthrie from WisdomTree, with a lot of first-hand experience in bringing tokenized investment products into the market. We'd like to start today by giving a high-level introduction to the audience on the businesses that you're leading, and what are the ceilings that you're pushing against at the moment, and what are the levers you're using to deliver value. And we'd like to start with Jason, that left the pilot phase long ago.
Yeah, absolutely. So, hi everyone, Jason Guthrie. I'm head of product for WisdomTree's digital asset division. We've been sort of pushing very hard in this space since about 2018. We've got 13 40 Act approved mutual funds in the market. I think we've got the fastest growing money market fund in the tokenized space year to date. I think we're just topping $1 billion now, which is great news. I think, the real push for us has been how do we bring kind of traditional exposures and the expertise that comes along with that from the asset management space and all the risk management associated with that, and deliver that into the on-chain environment with a huge focus on how do we meet clients where they are and how do we kind of solve problems that people are seeing. And I think the big kind of use case that we've really kind of built the product set around is once people get value or capital on chain, moving it off chain is the biggest friction point that we see in the system. So how do we meet them where they are, as well as trying to push the functionality of those tokenized exposures to line up with what people are used to in that space. So how can we get something traditional to look more like something crypto native? Can we move it around natively on chain using that infrastructure? Can we do integrations with DeFi products? Can we get things to work 24/7, 365? We're obviously not all the way there yet in the market. And I think you asked about the ceiling points. I think that's one of them. How do we line up markets that have kind of different operating models with this new infrastructure? But that's definitely the direction we're pushing in and where we want to add value, or where we think we can add value.
Thanks a lot. I think we'll continue with Andre, with a lot of different sets of challenges in Brazil.
Good morning, everyone. Is it sound okay? Yeah. We have a full crypto offering in our applications right now in Brazil. So the next phase that we are focusing on is how to integrate everything in terms of the on-chain infrastructure to the payment layers, to the FX layers, and of course, everything related to more bringing traditional assets on-chain. There's a lot of development being done in Brazil. The regulatory landscape, it's sort of like good. So what we are working together with the market internally, it's apart from, let's say, everything related to the crypto asset class, how do we move on this next phase? Everybody's talking about stablecoins right now. Brazil has a very sophisticated payment rails already, 24/7, PIX. So the biggest, I would say, use case right now, it's everything related to cross-border payments, which for Brazil is very important. Very expensive as well, so a lot of the market's playing a lot with how to use stablecoins and of course on-chain infrastructure. And then a part of that, how do we bring, let's say, traditional assets on-chain? There's a lot of things being done in Brazil. We did a tokenization back in 2019. Was a little bit of a pilot, but a real one with real money, real clients, real product. And now moving to the next phase where we'll be able eventually to scale this, okay? Because, scale is crucial for the industry, right?
And Nadine, the next, I think on your side, scale and quantifying that scale is one of the things that really matters.
It does. So good morning, I'm Nadine Chakar. I run the digital business for DTCC. And we sit in a little different environment. So we're the financial market infrastructure provider in the US. So we administer about $100 trillion in equities for the US market. I came to DTCC through an acquisition that occurred almost 2 years ago. So I ran a fintech called Securrency. We had partnered with WisdomTree at the time to help them build their capabilities, sold to DTCC in 2024, I think, 23, 24. Our perspective is slightly different, and it's a three-pronged approach. One is working with the industry to try to have a common infrastructure. We've seen a proliferation of various infrastructures from various banks, fintechs, and so on. We're just trying to find a common structure where we can have a little bit more interconnectivity, which we hope will lead to interoperability over time. We're also trying to help the community innovate. So we've created and established some sandboxes, which we called Launchpad, that is seeded with not just our own technology, but other technologies such as Fireblocks and others, where people can come in and experiment with tokenization, with reporting, and so on. And lastly, hyperscaling. One thing that we believe in, we saw Michael this morning talking about like 1,000 transactions per second, moving maybe to 20,000 transactions per second, but that's still suboptimal when you're looking at hundreds of trillions of dollars of value that needs to move through the networks on a daily basis. So we're also working on hyperscaling, ensuring that we do for digital assets what we do today for traditional assets around security, scalability, and safety. So we have been working through all these challenges with our participants. So we're trying to build for the market, with the market. And back in April, I think, we demonstrated how you can actually move collateral at the speed of the network and be able to finance trades anywhere in the world using collateral anywhere in the world, whether the markets are open or not, and provide clients with the balance sheet efficiency, cost efficiency, and operational efficiency. And now the last component we're working through is really tokenizing the US market. As I said, we service $100 trillion in assets, and our aspirations, I want to be clear, to our aspirations, they're still subject to regulatory approvals, is for us to try to tokenize our entire inventory. And we will bring on-chain. Now, it will be done gradually. I don't want to mislead anybody for you to think tomorrow morning we're going to wake up and have 100 trillion on-chain, but we will start to have a fair amount of supply on-chain that would start, which is the header of this session, right? How do you move from POC to full-scale production? And I think that's part of it, is making sure that supply is there, that the buy side and the sell side are well connected, and also bridge between the old and the new, because not everything is going to be tokenized on day one, right? So we still have a journey to go through. And we aspire for DTCC to play that role in the market as we move forward.
Thanks, Nadine. I think back to Andre, seeing one of the major financial market infrastructures globally going or having aspirations to tokenize the market effectively, the US equity market, does it have an impact on you? Does it facilitate this getting into a scale that we are all aiming for?
Yes, I think yes. I mean, one of the challenges is that when we think about how the financial industry works and the capital market works, is that we have like several different ledgers, right, that not necessarily talk to each other. Even internally at a bank, if you go to understand how a bank works, you have several different databases. And so the way that the market play out right now is to have these, let's say, somehow big centers where you can concentrate all the data and the market can use. So what we're talking here, okay, is there a possibility for this infrastructure to change to, let's say, more common ledgers and databases, which not exactly what we've seen right now. In the previous panel, people were discussing about that. But having companies like DTCC and even the exchange in Brazil that is being very active as well, I think it's it helps not only the industry to move, to pay attention, but also to eventually get to these, what would be this common infrastructure if we are to get to a more common infrastructure, right? At the end of the day, it's not clear if we're going to have like I would say a more broad used or a broad blockchain, or call whatever you want, or if you're going to have several different ones that will somehow interoperate among them. I think we are in the very beginning of these developments, okay? And beginning because the crypto industry already developed a lot of like infrastructure, but now as the big institutions are moving in, and where the trillions and trillions of dollars are parked, now we're exactly in the process of finding out how this thing will play out. It's not easy, not only internally, but externally as well. But I think this is a trend that won't stop, because eventually it might be faster, it might be more secure, it might be cheaper. That's why we are building on top of these, otherwise it makes no sense. But we are in the very beginning of this.
So can I just, so I think agree with all of that, right? I think everyone understands that if we get a common infrastructure that breaks down a lot of the silos, whether that's national or intra-market or intra-asset class, that can lead to more scale. But I think the industry needs to acknowledge that right now, all of those siloed components of the traditional market has more scale than anything inside crypto right now. And this sort of speaks to like, how do we, we know that long-term view, but how do we kind of take the steps to get toward that, and getting past these kind of like conceptual proof of concepts? I think that's actually the real challenge that I would love to see the industry kind of focused on more, not the end state of it, but how do we get there? And to kind of get there step by step, we need to be, I think, incrementally adding value to a part of the market, a client base, a user segment, however you want to describe it, at each step of the way, that is actually more valuable than what they extract from the traditional space right now. And again, because there is more scale in each of those fragmented segments than what we've got right now, we've got to be very strategic and deliberate and ruthlessly focused on actually delivering that value at each step of the way. Because people aren't just going to show up because it might be better if everyone does. You've got to entice them by being better today, not better in 10 years.
And if I can jump in, because this, let's say, if I want to distribute one of your funds for my retail clients in Brazil, right now, they will have to use a different part of our application, open an account in the US that eventually will be offering one of your funds. Mm-hmm. If we have these on a common infrastructure, tokenized one, I'll be able to, I'm talking the same language of you, so I will be able to distribute this directly to my clients there. That will cut a lot of the friction on the process that we do right now. For the client, will be, that the good product beyond the pilot will be okay. The client will have available all these different products in a much eventually cheaper and eventually much broad way than what we are doing today. That's it.
It is just time to start moving away from speaking points to proof points.
Yeah.
Yep.
And that is imperative. We know the technology works. Scale will take time, but I think we're going to have to go through a lot of growing pains to get to. People put up with the inefficiencies today because, to your point, there's something at the end of it. Mm-hmm. There will not be one blockchain to rule them all. At least that's not our hypothesis, and even not a common infrastructure that's too big, right? Like that's not intuitive considering the decentralized world that we're looking to. But I think we also need to acknowledge that some of the intermediaries do have a role to play, albeit maybe a different one, to entice clients to come there. So we do need a level of standards that we can all rally around, because what I'm worried about is I look at the proliferation of different infrastructures around the market. And take tokenization, there's a lot of firms out there right now tokenizing and doing different things. Mm-hmm. But when you try to aggregate it all, or when you try to look at data, nothing matches. So we just need to agree at very high level, maybe loosely defined standards. So when you look at a token that was issued by company A versus company B versus company C, and you bring it all together as an investor, it makes sense. It's the same with the L1s. There's not a day, log in and take a look, and a bank or a firm is issuing a new L1, a new stablecoin. Clients are, when we're asking clients to define their North Star and try to articulate the problems they're trying to solve, they're confused by the amount of choice that's out there. And we do, as an industry, need to help them push in that direction. That's the only way. And at DTCC, we are trying to play our role in the marketplace, which is different from pretty much all of you in this room. We can't choose winners or losers. We're just trying to bring it all together and let investors and fintech firms and others make their own choices.
I think you said a lot of interesting things. That incrementalist change, we sort of know where we're going, but we have to focus on the tangible things that we can influence at the moment. I think it will be great to hear from actually each one of you. If you look at the next 12 months, where is the area of focus where you see you can deliver tangible value to customers? Where is where you're narrowly focusing right now?
So for us, it is, as I said, tokenizing the inventory and also give them means to be able to distribute and leverage these tokenized assets. Because, yeah, I could sit here and tell you we're going to tokenize everything. That's awesome. And what do you do with it?
Yeah.
It's, you don't just want to park it in a wallet. You want to be able to use it as collateral, use it to accelerate any use case or problem that you're going to have. But also for some of us that have worked in the infrastructure for a long period of time, moving from a structure that's always been account-driven. Think about this. You've got a custody account, a bank account, a brokerage account, all these accounts that are slowly but surely going to now start to migrate into a wallet infrastructure. That, for us, is also working through that and making sure that the markets and our participants are ready for that drastic change. So tokenizing our assets, creating or deploying an infrastructure where collateral can be used freely among various CSDs and CCPs around the world, and also trying to bring a little bit of order is the wrong word, but I'm sorry, I can't think about it. It's this proliferation of L1s. You may want to tokenize on one and move it to another and store on a third. Yeah. It's really trying to figure out a better way to orchestrate that. We're not doing this alone. We are partnering with the industry, with fintech, big tech, you name it. But our regulators have played a very important role, if you will, in helping us define this roadmap as we move forward. So you'll see us be more active in the industry, always true to our mission of ensuring that the markets remain safe, secure, and liquid.
Over to you, Andre.
Yeah, for, say, the next 12 months, the focus is first on improve the cross-border experience and service for our clients, especially moving money in and out from Brazil. We still have some regulatory change that are in the process of being made to have that at scale. And on a more, let's say, product side, to bring new products in tokenization, in tokenized format, that right now they're not easy to offer if you don't have it and tokenize it. For instance, like USD yield products for the Brazilian clients, and eventually some fixed income related products in Brazil as well, like receivables, products that are easily accessible by institutions, but not necessarily by the retail. And once we have in a tokenized format, and once we already have a platform, it will be easier for us to have that.
Cool. So I typically split this up into 3 buckets. So first is exposures, second is usability, third is accessibility that we really try to push on to add value right now. So I think exposure is relatively straightforward. We've got 13 products in the market. We're committed to bringing more. We've got private credit products, equity premium products, things like that coming down the pipe that are, we think interesting to the space, and we're very committed to continuing to grow the diversity of assets we can offer on chain over time. The second, in usability, really looking at how we can leverage the characteristics of this infrastructure to make these exposures more useful than you get in the traditional markets today. So allowing people to express choice in how they want to hold it, allowing them to be natively transferred to a self-custody wallet or peer-to-peer. I think is really important, focused on increasing liquidity. I've mentioned 24/7 tradability, exchangeability, I think is going to be a real value add. If you can initiate a transaction and have that done in one sitting with all the finality of the money in your wallet to then go do whatever you're doing next, that's a big user experience increase over what we've got today, as well as focusing on like DeFi integration so that the native innovation that we see in the space can leverage these more traditional exposures. And then the final one is accessibility. So making sure that the products are available as many places as possible. And this is us looking at B2B2B and B2B2C integrations as to like how these tokenized exposures and the utility that we're trying to deliver are available in as many places as possible. The whole goal here, I think, is to make sure that people have as much choice and optionality as they can in terms of accessing the exposures, with the view that we can continue to grow the amount of capital that's on chain and we can parlay that into the use case afterwards. And I think that's, that's kind of really the key here. Once we get people into this ecosystem, they'll see that it's better to use. We can add the next use case, and I think there's a 1 + 1 = 3 effect here. So that's really what we're chasing.
Thanks a lot. I'm going to change gear a little bit towards the end of the panel. And when we were preparing the conversation, we also wanted to talk about the hard part. We were talking about the POC hell and how difficult it is to escape from that. I think you said that, Jason. Any lessons? We have here in the audience people that work in crypto-native industries. We have others that work in large financial institutions that still look at digital assets and are not 100% in. Any lessons from that POC hell? How did you get through it successfully?
Yeah, I think that's my term you've stolen there. Look, it's definitely been, I think, a staple of the industry to date is that a lot of people just want to chase a headline or a big piece of PR. Right, they want to get out there and say they're doing something in blockchain, and you might see one really, big internally funded initiative that will make a headline that has absolutely no follow-up, and mostly because there was no plan to ever have any follow-up in that, to develop this into a sustainable use case that happens. And I totally understand the desire to do that. Like, it is good publicity, it makes you look innovative, it makes you look like you're taking, this space that has a growing popularity seriously, but we do really, really need to get past that, right? We really need to be focused on like doing the hard work to add the actual value, to be committed to the space, to resourcing it appropriately, to fully understanding that, there's not a free lunch here. If you're a financial institution, you don't just get to show up, say I'm doing blockchain, and suddenly, there's 10% increase in whichever business line you did this for. You're going to have to be committed to this for the long term, because it does take time, effort, energy to build product, to work with regulators, to build partnerships, to find product market fit that actually does add value. And, I'd love to see, Nadine made a really good point, we need to be past talking points and more on these kind of success metrics. I'd love to see people starting to talk about, we've, facilitated X number of billion, trillion, whatever it is, transactions. We've brought these on chain. We've lowered the time to confirmation, the time to transfer, the costs associated with it. We should be talking about these types of proof points of like how we've actually made the ecosystem better. And that should be what anyone entering, I think, a crypto-related, blockchain-related project, they should be their success metrics, not can I get a press release out that says, hey, I'm great at blockchain.
I think you've been very successful in engaging the industry, in getting past.
It's hard. It's really hard work. And I think in the beginning, innovation via press release worked, right? But as we've progressed, like, this is hard work. It's getting into the guts of your infrastructure, and that's where it starts. Jason's right. For the past couple of years, you'd say, hey, we're going to trade crypto, or we're going to launch a stablecoin, or look at us, we've done X. That got you a little bit of creed in the market as an innovator. But for it to be sustainable and scalable, we have to do the hard work. I mean, we didn't get here by sprinkling pixie dust or, growing magic beans. It is hard. It's engaging your regulators. It's really taking a very hard look at the problems you're trying to solve, of what your clients are looking for, and go through the, I wish I could tell you, go to Fireblocks or come to DTCC or go to WisdomTree and it's going to solve your problems. It's not. But we need to do that and we've exacerbated the problem by just going our own way as well, and trying to come up with different ways of getting to the, there is no way but really doing this step by step. I think there is benefit for us working together as an industry, so there's safety in numbers, if you will. I would stop competing on infrastructure and really doubling down on the strength of your ideas, on how you're going to service your clients, and let's agree on a common standards, common infrastructure. I think that gets us to the end point a lot faster. But the time is now for us to unite and try to do that, versus coming up with, it's just, it's not miraculously gonna happen. And we've been at it for 10 years. We know it takes time. We know it's hard. But we can finally see the light at the end of the tunnel. And it's not a train, but it's actually a promise of a more efficient and a more open and democratic financial system. But it's got to be done step by step, and hopefully all of us as a market. And again, we're committed to working with all our participants, which some of you are part of that community, both in the US and abroad, and continuing our mission to get assets on chain and building a digital future. So we'll see where that goes.
It's a very positive contribution. I like that direction. Andrew, would you like to?
Yeah, I think apart from the regulatory and the technical challenges for, I would say, a more traditional firm, not the BTG is that traditional, but I think one of the biggest challenges is to understand where to focus on, right? Because for now, building the crypto platform was sort of like easy in the internal convincing, because it was something new. So it was a clear product that our clients were demanding, okay? When we go back to everything related to tokenization of, let's say, more traditional products, it's a little bit more difficult to move the chains internally to, okay, this is a better way to do whatever we are doing. And because in an established firm, if you don't have this first layer of not only approval, but of education and convincing people, you never get to the point of actually building something, then facing the technical and the regulatory challenges. Tokenization was at BTG was the first vision that we have to blockchain before we decided to open the crypto platform for the crypto asset class. And still right now, we still need to find, okay, which are the product that will make this thing move. That's why I mentioned previous that we are focused a lot in the products that we can only bring to our clients if we will be doing this in a tokenized format. So I think there are several layers, and everyone that works in a more, I would say, established institution now will face this. You have the education, the convincing, and then really identifying something that can drive your business, or eventually that you can improve your business model. That's again in Brazil, cross-border payments, use stablecoins. It's like easy to understand and to measure where are the improvements, where are the gains, and how these might eventually help the overall business. So we are very focused on this. So biggest challenge is this. Regulations moving, technical challenge, I mean, we learn, okay? We partner with people who understand more than us. I think is it. But it's moving well.
Great. We have a few minutes left. I'd like to open it for the audience. If anybody has any questions, I see Goldie is wandering around. So if you want to raise your hand, he'll come.
Richie, you're also the treasurer. I'm sorry, sir. It's really Jordan. You're also the treasurer of one of the largest companies in APAC that's doing remittance, and called Cebuana, by the way. And you are very interested in tokenization. What's your question to this esteemed panel?
Actually, my question is, with tokenization, the real challenge will always be liquidity and interoperability. So I think the question is, how do you see it coming together to solve this problem? Because at the end of the day, it's just like what Goldie is saying. It's going to be not only a stablecoin sandwich, but the end point is it will be like a token sandwich. So if you have a lot of liquidity players and interoperability players in the middle, you'll be able to bypass the whole centralized system and just use on-chain localized tokens to be able to move money anywhere.
Thank you, Richie.
Yeah,
Do you wanna
please.
go?
No.
I was just going to say, let's start with, what you're tokenizing. Everybody's tokenizing, and tokenization engines are a dime a dozen. But how you tokenize matters. And I think the SEC did clarify that a tokenized security is still a security, at least in the US, subject to SEC regulation. So you've got to do this right. You've got to make sure that if you're issuing a digital twin, you got to start with the fundamentals of, protecting investor rights, right? So dividends, proxies, and all that stuff is hard. So you got to start where if we can just get a common understanding when you tokenize, what does that mean? Because to your point afterwards, and that's the point I made earlier, if we're using different methodologies and different ways of doing that, then we are going to fragment liquidity. I think also yesterday you saw NASDAQ coming out with an announcement that they filed a release with the SEC to start listing tokenized securities, and that's going to be really important, right? So we have been working with them. For example, we will be looking to list digital assets and traditional assets under one CUSIP to preserve that liquidity. So there's work in flight to do that. But believe it or not, it always comes back to the fundamentals of good standards, a good infrastructure, that when you tokenize something and somebody else tokenize it, that at least when we bring it together, we're not bringing apples and oranges together. And we probably will for a short period of time. But as the likes of DTCC and other big, large financial institutions will start to put more assets and introduce more products on chain, it's gonna deviate, right? And the only way we can bring it back together is getting all the ICSDs, the CSDs, and CCPs together. So global market infrastructure with standards, working with a lot of our fintech partners to get there. But you will not be able to run away from the fact that it's gotta be done right at the base, and then you build from there. At least that's my
No, it's a super important point around if we're tokenizing something that already exists, that it is one-to-one, same rights, same corporate actions, everything. The reality is that liquidity is fungible as well, from one exchange to another exchange, from a natively issued asset to a derivative. We see this all the time in financial markets. ETFs, great example of it. The liquidity of the underlying basket is fungible to the liquidity of that wrapper, right? We can do the exact same thing with tokens as long as it is this one-to-one mapping, and we will see the market starting to port it across. I think the other point to realize is that liquidity is not this amorphous concept that someone shows up with. It's two-sided, right? So there needs to be both the demand and the supply. We know the supply side is fungible, and I think we'll see it come as we see the demand side growing, which is where I come back to use cases, getting more people on-chain, sort of using these for particular functions. That is actually a huge driver of liquidity that I think we'll see grow as well. But having the nature of tokenization lined up such that we can bootstrap the liquidity from existing markets into the tokenized space is going to be an incredibly important part.
Yeah, and just to add, liquidity is a consequence of several different things, right? And sometimes I see people in the crypto industry with this concept, okay, let's tokenize this asset because then we will bring liquidity. No, you're not. Because again, if you tokenize, for instance, in Brazil, we have some initiatives on that. People tokenize like a startup equity. It won't have liquidity because there's no market for that. So as Jason and Nadine said, the fungibility is important. Let's say that this infrastructure interoperating is important. but you need to understand the asset, you need to understand the supply and demand. That's why eventually everything that's happening with US money market and treasuries will be the way to move these, because it's a huge liquid market that you just do in a different form. So but just to be able to understand where liquidity comes from, right? I think that's the most important thing.
I think the takeaway from the panel is that to tokenize capital markets, we need liquidity, we need standards, we need technology, we need regulation. We also need inspiring people driving the change. So thank you very much for joining the panel, and it's a pleasure to have you at Spark. Round of applause.
Thank you for having us.
Thanks.